Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy she is a fee-only financial planner with the Family Wealth Consulting Group. She has a Master's of Science in Financial Services, recently awarded, Chartered Financial Consultant, Chartered Life Underwriter. She's a fellow for Life Management Institute and Chartered Advisor for Senior Living. The company that she works with is the Family Wealth Consulting Group, which she owns together with her husband, Craig Martin. And then she has another company that's called Estate Guidance and Insurance Services. And in that company, she also offers a range of insurance products, including life insurance. And that's what we're going to be talking about today. We're going to be talking about using life insurance for financial planning and estate planning goals. So Peggy, thank you for joining me today.
Mike, thanks for asking me to come.
So you can tell with all those letters after Peggy's name and so forth that this is not a Mickey Mouse simple little subject. It's really quite a big subject, and people have to spend quite a bit of time and money in order to prepare for getting a license to sell life insurance and so forth. But I think that it's an important topic, and so we're going to try to hit some highlights. And the idea, again, is for this to be a starting point for a continuing conversation with a qualified life insurance representative. So Peggy, thank you for being our qualified person here to talk about this today.
It's a pleasure to be here.
Okay, let's get on with our questions. So why is life insurance an important component of the whole financial planning picture?
Life insurance plays an important role in what we call the family wealth plan, which a lot of financial advisors call a financial plan. It's a risk management tool. It can help keep a family surviving if the primary breadwinner or primary breadwinners are no longer around to do that role. And it's normally very quick in providing the liquidity. It's also a risk management tool, though, from the standpoint that if a person owns a small business, it can provide business continuity. If the primary owner of the business is deceased or dies. And it also can be a key person life insurance form of liquidity to, again, my experience has been with smaller companies, where smaller companies are able to replace the person that died because they have the life insurance proceeds. So it definitely manages the risk. It manages the risk of that premature death.
And it sort of helps then in the transition process for a lot of different situations, I guess is what we're saying. Whether you've lost a breadwinner, you've lost a key employee, you've lost the owner of the business or whatever. So it can help to fill a lot of different gaps.
Absolutely, because remember, when a key person dies, whether it's a loved one, the primary breadwinner, or a owner of a company or a very key employee, in addition to having concerns about financial issues, it's a very emotional time for all the surviving people.
Right.
So if you have the financial component somewhat taken care of because you have liquidity with a life insurance contract, it makes that transition somewhat easier.
Yeah. So why don't we talk for a few moments about some of the problems that life insurance can help solve. Maybe some that we haven't touched to, or maybe we can elaborate a little bit on some of those that we have.
Okay. Well, again, the primary breadwinner is the one that first comes to mind, especially in the financial planning process. We work a lot with couples, families, and I always look in that process, what happens if the number one person dies or the number two person dies to that family unit? What is going to happen if there are young children? How are they going to be able to continue? How is the surviving spouse going to be able to pay the bills, the mortgage, all those things that are so much a part of our daily lives? So I think it's critical for financial planning professionals to look at life insurance, whether they do it themselves or refer it to someone else, but it is definitely part of the financial planning process.
Right, and unfortunately, a lot of people have gotten in the mindset, it's sort of, like put a cross on the door of, we've got to keep the life insurance person away, and
correct.
And for whatever reasons, what they may be doing is sort of creating a problem for their family later because they haven't addressed the things that a life insurance person can actually help.
That's correct. If you care enough about your family, about your small company or family-owned company, if you have one, or even a community cause, if you care enough about any one of those things, having life insurance in place is a wonderful gift to the people that survive you. And in my years of working with life insurance, I have seen about $20 to $25 million of death benefit be paid out. Mm-hmm. I have been able to see small companies survive. I have been able to see families continue, children to have college educations because mm-hmm. the death benefit was there for the families to work with and the companies to work with.
Okay.
And it's not that I like a death to take place, but it is rewarding to me to see that the life insurance has satisfied its purpose.
Right. There's a couple of things I guess that we haven't talked that much about. So one is estate taxes, and so part of what's happened, or where we are right now estate tax-wise, we've had other interviews about this, is we've got these very big exemption amounts, $5 million per spouse. We've actually got a portable exemption, supposedly, but if you get a chance to use it.
Correct.
And then right now, though, that's scheduled to expire after 2012.
That is correct.
And so it seems like for most families, the estate tax issue isn't going to be a big one except for as a contingency plan. And meanwhile, though, for the more substantial families that have a lot of assets, they still do need to be thinking about the estate tax and how it's going to be paid.
Correct. We have, over the years, worked with a number of families where we have placed insurance policies, typically insuring both the husband and the wife mm-hmm. to provide estate liquidity to help to buffer the estate taxes. And have been going through and looking at our current client base to determine, gee, this is a planning opportunity. Not quite sure how it's going to play out because of this new exemption amount. Mm-hmm. And basically where we are with it at the moment is we're saying let's hold on, let's see what happens towards the end of 2012. There could be a possibility that if Congress comes back and says, gee, it is a $5 million exemption per person, and people may have policies in effect that are covering estate taxes that no longer exist, not suggesting that they necessarily get rid of the policy, but maybe we relook at the contract and determine what other kind of planning opportunities are there with that particular contract.
Right. So maybe there will be other goals that they have that policy could now serve a purpose for.
Right. Well, or they may want to be able to give their children the benefit of having the insurance mm-hmm. anyway. Mm-hmm. Or, it could have been that they wanted to do something on a charitable level and just never thought about doing that before. Mm-hmm. And now they could do that with other assets where the insurance can be something that's given back to the children.
Right.
So there's all kinds of possibilities. The thing to keep in mind is to keep the planning open mm-hmm. and have a conversation, keep in touch with your clients and have a conversation with them about it.
Right. Another area that we haven't talked that much about, but there are some final expenses that need to be paid, mm-hmm. Even when there is no estate tax, and some people don't think about it that much, but there may be estate administration, there's funeral.
Right.
Of course, there's a big range in what may be there because some people may have a very modest funeral, or some
Correct.
people it's very elaborate, and so there's a big range there and what the expense might be. Another thing is quite often there are bills to pay, debts,
Correct.
credit cards, things like that.
You know, my experience has been that some of the smaller policies that have been able to work with the beneficiary on the death proceeds, and when I say smaller policies, I'm talking about 25, 50,000.
Mhm.
Sometimes that money becomes more critical than these larger policies where you have $2, 3, 4, $5 million worth of coverage coming through. Precisely for the reasons that you just cited, that people do want to have some kind of a special memorial for the loved one that they lost, but they have no cash. They don't have an ability to do that. So the life insurance gives them an opportunity to be able to create and honor the person that they've lost the way they would like to do that. Also, if there are credit card bills out there, which, you know, in our society frequently that's the case, again, when it is somebody who does not have much in the way of resources, that life insurance proceed can come in very handy to help relieve a lot of financial stress.
Right. And one of the things, I went through this experience, and I know that you have recently, but actually the funeral homes, if you don't have the cash on hand, they will say, well, do you have a life insurance policy that can help to fund these expenses?
Correct.
So basically they know that they're going to get, paid, and so they can go ahead and provide the services with the understanding that, in a few weeks this life insurance is going to be paid, and they'll be paid as well.
Yep, my experience with that has been that once you get that certified death certificate, and sometimes that can take up to 10 days to 2 weeks before you get that.
Yeah.
That can be a longer process than getting the death benefit back from the insurance company. In particular, on contracts that have been in place for a lot of years, I have never had any problem with that at all, with an insurance company not responding quickly.
Okay. Well, anyway, so why is life insurance the great tool to solve all these problems that we've been talking about?
Well, we are very fortunate that current tax laws allow life insurance to be income tax free. And it even allows the inside buildup on a cash value policy to be income tax free. And it's a great tool when it's used properly. I am an advocate of using life insurance for a death benefit. I have not ever specialized in using life insurance for anything but that. And there are other opportunities with life insurance, but I am a purist with regard to the contract and believe that the wonderful gift of it is its income tax-free benefits of the death benefit. And it's just a wonderful, wonderful gift back to a beneficiary.
Okay. So part of what you're sort of hinting around, and maybe we'll talk about a little more later, but there are some situations where life insurance is sort of used as an envelope for investments that are held within the policy.
It can be, as long as the contract continues to satisfy the definition of life insurance, which is more complicated than what we want to review today.
Right.
But a simple answer to that is yes, it can be done.
Yeah.
Yeah.
Okay. But you prefer to focus on the death benefit itself, which is fine.
I do, and my reasoning for that is over the years, having worked with life insurance for about 35 years now, where I perceive that my clients are at risk and that I'm at risk is when I go out of using life insurance for a death benefit. If you start pulling out all the cash values in the policy to pay yourself, which you can do, and there's lots of ways to illustrate how it can help pay for college education. It can be a form of deferred compensation. And I am not an expert at that, but I am an expert at making sure that the risk management component of the life insurance is put into place.
Okay.